Welcome back to the Global Business Report here on Arise News. I'm Idia Isian, coming to you this morning from Nigeria's commercial capital, Lagos. Chinese smartphone maker Xiaomi, which tumbled Samsung to become the leading smartphone manufacturer in India, has set up 500 Mi stores in rural parts of the country and plans to ramp it up to 5,000 stores by the end of next year as part of its push towards offline sales. Xiaomi entered India through an online-only business model and branched out to offline stores only last year. So far, it has 50 dedicated of 4,000 preferred franchise stores that retail phones from other brands as well. It also claims to have a 50% market on the opportunity in the underpenetrated rural. It's red all round for global stocks. Asian stocks fell after another crash on Wall Street. Investors were left with nowhere to hide. Intensifying concerns about global economic growth gripped financial markets. We cross to Hong Kong for the latest from Arise Asia business correspondent Flynn. Joel, let's start with a look at the stock markets in Asia, which are just wrapping up. What's been happening in regional action today?
It was a day of two halves, really, for Asian markets today, Idia, both in terms of the morning and afternoon sessions, and indeed in terms of geography for the region. Greater China markets did manage to turn around early losses this morning by the end of the session. Most of the rest of the region did not. The Shanghai Composite today recovered late on to rise 0.2%, while the blue chip CSI 300 index added 0.3%. Consumer stocks and real estate both offset the drag from energy shares, while healthcare and tech shares also rebounded later in the session. Here in Hong Kong, we saw similar trade pushing gains just north of 0.5% by the close. But in South Korea, the Kospi finished 0.3% lower, pairing losses late on slightly as investors digested some key export data out of Seoul today as well. Japan's Nikkei also finished the session down, shedding 0.4% as resources and trading house shares both dragged thanks to the fall we'd seen in oil prices, of course. The broader Topics index, meanwhile, dropped 0.6%, edging closer to bear market territory. Most Southeast Asian indexes, meanwhile, fell too. Indonesian shares dropped more than 1%, although Singapore's main index joined the late turnaround we saw in Greater China. Aussie equities finished lower as well, the ASX closing the session 0.5% lower.
Well, Joe, we wouldn't be speaking if we weren't talking about the U.S.-China trade tension. So further ratcheting that up clearly is the comments from a U.S. trade representative, Robert Lighthizer. What's the next step now for Beijing?
Yeah, well, Robert Lighthizer has said that China has its unreasonable trade practices. I'm sure you're as shocked to hear about this as we are. The office that Lighthizer represents was updating its Section 301 investigation, which is looking into China's intellectual property and technology transfer policies. As you and I both know, these are, of course, at the heart of the trade war spat. So what's interesting about this from China's point of view? Well, certainly the timing is, for one. Lighthizer's rationale for his comments was that he was completing the update as part of the government's strengthened monitoring and enforcement efforts over Chinese business practices. But we know the G20 is not far away. This, of course, will add to pressure and the tension around this potential meeting between US President Donald Trump and Chinese President Xi Jinping. But the update has also acknowledged the relaxation of foreign ownership restrictions. We talked about those earlier this week and, of course, indeed last week as well. The USTR said, though, that those restrictions do still require, or at least pressure, US companies to transfer some technology to Chinese entities and therefore remain unfair and unreasonable. Now, China today hasn't responded. It's refused to comment in its daily Commerce Ministry. Instead, it's pointed towards a white paper it issued back in September. That, of course, gave a lot more of a detailed response to US policies and claimed that it was having a knife put to its neck by Washington's conduct. Clearly, both sides continue to play the victim in all of this. Continue to heat things up, really, until Trump and Xi sit down, or hopefully sit down and talk in Argentina.
Well, Joe, I agree with you. I don't think things are simmering anytime soon between the U.S. and China. But now let's turn to Japan. What stage are they at with the inquiry into Carlos Ghosn's arrest?
Well, according to local media reports in Japan this morning, prosecutors are still considering their case against Carlos Ghosn. He was, of course, arrested on suspicion of financial misconduct in the wake of this internal investigation at Nissan, which alleged that the former boss engaged in years of wrongdoing, which included personal use of company money and under-reporting earnings. Now, analysts say it does look more than likely he will face prosecution at this stage, but as of yet, he hasn't. And we haven't had confirmation of exactly when that will happen. But interestingly, the company itself, it looks like it could perhaps also be the target of a prosecution due to some apparent culpability in the way that it was involved in some of this wrongdoing. Nissan has portrayed itself as the victim of Ghosn's conduct. The difficult thing really at the moment is that no one is really saying anything about that. We're still very much in a holding pattern, waiting for the next step, which we do expect to be from the Japanese prosecutor's office. What we have had today is the Japanese government saying it intends to defend this alliance between Nissan and Renault and, of course, Mitsubishi. That was an alliance that Ghosn was clearly instrumental in trying to shape as in his role as one of the car industry's biggest leaders. Today we had a top government spokesman calling for a stable relationship between those two companies. And as I said, Mitsubishi as well. It looks likely we may hear something tomorrow. That is when we are expecting Carlos Ghosn to be removed formally as the chairman of Nissan. That may indeed prove to be the final step before the Japanese prosecutor finally launches formal action.
Well, Joel, I guess we'll just have to stay abreast of that and wait and see what happens. Now, there's some worries about the Australian weather, meanwhile, hitting the cost of clothing, Joel. What more can you tell us about this?
Yeah, you're talking about wool, one of the key parts of the international supply chain, of course, of clothes. And Australia is at the centre of that trade. It supplies something like 90% of the world's exported high-quality wool used in most of the clothing around the world. And right now, of course, that is a country that's going through one of the worst droughts in its history. That's impacting its farmers, its agriculture, and indeed clothing, it seems, and forcing the cost of wool up, unsurprisingly, as harvests fall, and that is having a knock-on effect on the cost of clothes all the way down to the consumer just in time for Christmas. Now, we've had one Italian clothes maker talking to Reuters over the last few days. It said that it's looking at increasing a year or so. Another Swiss brand separately has said it's bumped up the cost of its merino wool T-shirts by something like 15%. So the cost of products clearly going up. But interestingly, the amount of wool that is mixed into other multiple fabric clothing items, it also looks like it's being hit. We've had H&M say that it is these clothes. It won't say yet what it exactly is replacing that wool with, but of course that could potentially affect the quality of your next sweater, for instance, Idia. It does come, as I said, just as we are nearing Christmas. It also comes, of course, just as wool becomes more and more popular, particularly as a result of its use in things like sportswear. Which has become more popular thanks to wool's ability to help regulate the temperature of our bodies as we get our exercise on. But if this drought does continue, potentially, of course, we could see change on environmental things like the wool industry. That could well have the chance to fundamentally reconstitute the T-shirt that we all have in our drawers.
Well, Joel, it's interesting to see how the weather can affect costs, which will affect us personally. Now, turning to Hong Kong, there is some optimism about the property sector this morning from ratings agency Moody's. Now, at least as far as real estate firms are concerned, can you tell us more what's going on that front?
This is related to a report that Moody's, the ratings agency, released this morning. It's given a pretty optimistic outlook for 10 locally rated property firms here in Hong Kong. It comes, interestingly, just on the same day that the Hong Kong government suggested it may be implementing cooling measures designed to try and reduce the soaring cost of Hong Kong homes. Moody's has said that the earnings, though, of property firms here in Hong Kong may well, in fact, actually improve over the next 12 to 18 months, even if prices do end up looking like they have to go down. Now, robust residential pre-sales, that's sales that were being made ahead of the development of brand new flats here in Hong Kong, particularly over the last for some of these companies. Steady office income growth from rentals as well have also bolstered the bottom lines. On the other side, we've had retail sales growth, residential contracted sales looking like they're at risk from the next quarter, from Q4 onwards. Of course, there's significant capital market volatility here in Hong Kong, in the broader Asia region as well, of course, which we know has been an issue for investors looking to try and shore up some of their income. And with these trade war risks also weighing on broader market sentiment, with this tightening interest rate environment also posing a risk, it does look like Moody's may well see something that the rest of us don't. Having said that, there was a whisper of Chinese mainland policy changes that could provide a boost. A lot of the companies that are listed here in Hong Kong, a lot of the property real estate firms that are listed here do have significant exposure to the Chinese mainland as well. So it looks like things could yet get better, even as we suspect that cooling measures and broader risk could yet see Hong Kong property prices fall.
Well, Joel, many thanks for shedding more insight into that. Always a pleasure speaking with you. Arise Asia business correspondent there, Joel Flynn. You're watching the Global Business Report here on Arise News.